and welcome back, Simon Atik, for part two of our first time home buyer conversation. You are the Senior Vice President of Mortgage Lending at Guaranteed Rate Affinity, which is a nationwide lending organization. And we're so thrilled to have you back. Thank you.
It is great to be here with you again on part two.
So let's get right into it again. First
Yep.
time home buyers, terrified. They're being bombarded by a lot of predators out there trying to sell them these loans that may be too good to be true. How do you identify what is a slimy lender? As a first time home buyer, we don't know.
Yeah, interesting. When we think of slimy lenders, we kind of think back in the days of, 2008 when we had the meltdown where, people were being given loans that they couldn't afford and eventually created a collapse in the mortgage industry. Nowadays, it's much harder to identify what is shady and what is real. So really I think the take home here would be to talk to a number of individuals, right? Certainly, if your agent has worked with someone they trust and that they're familiar with and they've closed transaction with, that would be a good place to start, right? Most people, unfortunately, run to their local banks. And I wouldn't put banks, in a safe place either. There are a lot of lenders that work at banks that provide unrealistic expectations and promises to buyers, and they use the interest rate as sort of a carrot, if you would, to get them in. And one of the things I think we spoke to last time was making sure you do enough due diligence up front as a buyer, but also the lender has to do enough due diligence as well to make sure they are providing you with the best product for your particular situation. And unfortunately, most lenders, even at banks, they won't do that. They won't do enough work up front. They'll just kind of paper push the file to the next person. And then ultimately, when you're in escrow, you get some bad news. And now you're kind of stuck trying to either figure out how to get out of it or having to cancel escrow, right? So talking to a number of lenders that either from referrals or people that your agent trusts will give you a good perspective on what to expect. And don't just talk to one person, certainly, and don't just talk to your local bank because they're not a mortgage company. And mortgage lenders like myself, who are direct lenders, work strictly in the mortgage world. We understand the mortgage guidelines. We understand what's out there. And in many cases, we're the best positioned to service you. So yeah, it's definitely a different market today. And do the homework and talk to a number of people before you make a decision.
What kind of questions or what kind of pitches are these slimy lenders giving a prospective buyer
Yeah.
that these buyers should already have their antennas up? What are they saying? Because as buyers, they may not know that that is not, not a good thing.
Yeah. So it's tough, honestly, for first-time buyers. I mean, there's so much misinformation out there.
Like what? Can you give me three
Yeah, so
big?
one of the biggest mistakes I think first-time buyers make is they hyper focus on the wrong thing. So for example, they're so rate driven in many cases that the first question they ask when they try to figure out who to go with as a lender is, what is your current rate? And maybe what kind of fees do you charge, right? Which are fair questions. But for the most part, that's kind of where they stop. That's their complete total assessment of what direction to go. And that is so wrong because, rates, there's no universal rate for everybody, right? And people all the time email me or call me and say, what's today's rate? And it's not a simple question because the rate is based on a number of variables, including your FICO score, what kind of property it is, what's the loan amount, how much you're putting down, what the occupancy is, are you living in it or not? And all those variables contribute to what the interest rate is. So there isn't a question of what's the current rate, and there's not one answer, number one. Number two, rates fluctuate every single day, just like the stock market fluctuates every single day. So people don't get that a rate someone quotes today is just a floating interest rate, and tomorrow it could be different. And so until you actually lock the interest rate, the rate today is just that. It's just an estimate or a floating rate that means nothing. That's number one. Number two, fees. Of course, fees are things that often get hidden. And a lot of lenders quote interest rates that have points or fees associated with them in order to get that interest rate, right? So a lot of times you go online, you'll get our interest rate, and you might see a little asterisk next to the rate. You look down in the small print, and it says this rate comes with a 1, 2, or 3 point, for example, fee for that interest rate. That means that lender is charging you for that interest rate. So the key question is always going to be, what is my interest rate at no cost or at 0 points, right? And that's a good starting place for you to understand what your actual true rate is. And from then you can decide whether or not you want to pay additional points or fees to lower or buy the rate down, right? And of course, fees. Lenders always charge a lender fee, and that's very common for lenders' fees to be between $1,500 to $2,500 for their lender fee. Fees that exceed that number, typically, you'd want to ask questions as to why that is. So a lot of mortgage brokers, for example, because they're middlemen, they work sort of in between the buyer and the actual lender, sometimes charge more in fees. So you want to be very, sensitive to understanding what fees you're paying for and what they are for. And what typically I would ask is to get a loan estimate or some type of, breakdown of fees from that lender to know what to expect, right?
Simon, why would someone go to a mortgage broker to begin with? Why don't they go directly to someone like you? You are the underwriter, you're the guy.
Right.
So why aren't they going
Yeah.
to the guy?
Yeah, it's a good question. I think a lot of it has to do with just a misinformation and disconnect to understanding what different positions are. I think people think mortgage brokers in general, or is anyone that works outside of a bank is a mortgage broker, which is just not true, right? The true definition of a mortgage broker is someone who really is that they work in a capacity of brokering the information and loan between the buyer and the actual investor. They're not the actual investor themselves. And so the proper term would be a mortgage lender, or a direct lender is the appropriate term. And a direct lender could be someone at the bank, because the bank does direct lending as well, or someone in my capacity that works at a mortgage company, who also works in the capacity of a direct lender. Biggest difference again is that banks have a very small sandbox that they play with, meaning they don't offer a lot of different products, um, other than the basic plain vanilla stuff. Whereas myself, I can offer a large plethora of different programs, whether you're a first-time buyer or an investor or a foreign national, or whether you need some kind of more creative financing using bank statement loans instead of tax returns, right? So all those reasons, we are much more focused on the mortgage products than anyone else. So really, the direct lender, first and foremost, should be the person to go to, not just a general mortgage broker.
Okay, to summarize this before we get on to the second question, is then what are the top three fake selling pitches that first-time home buyers or any buyer should really be leery of when they hear a lender saying to them? What are those three kind of fake things that they're luring the bait
Yeah.
in?
Yeah, and I want to say they're fake. I think some lenders just work in a different bubble than others in terms of what they perceive as quality, qualifications for their buyers. So the one thing is how much work is done up front, right? A pre-qualification versus a pre-approval, very different things. You can have a phone conversation with someone. They can tell you how much money they make, how much money they have in the bank. If that lender writes a pre-qual letter based on that conversation, that's a problem, because until you actually vet the buyer and understand exactly how much money they make, especially if they're self-employed, for example, you're not really going to provide them very accurate information. They're going to start shopping and wasting time and may not qualify for what you think they can. So number one is the amount of work up front. Make sure that lender is asking for documentation. And if it seems too good to be true and too easy, it's probably the case that nothing is that quick and easy. You want them to ask for a pay stubs. You want them to have you submit an application, pull your credit. That's number one.
So before I
Yeah.
forget, when I was selling one of my investment properties, my tenant wanted to make an offer on the house, and I knew she really couldn't afford it. She was barely able to pay the rent.
Yeah.
So she said, "Look, I have a letter from a lender saying I'm pre-qualified, not
Right.
pre-approved,
Yeah.
pre-qualified."
Yeah.
And I was like, how can you be pre-qualified? I didn't even tell you what the house was going to go for. Does Is that like a major red flag?
Yeah, it is. So again, like I said, when I do my classes and seminars, one of the first things we talk about is understanding the terminology of what a pre-qualification is versus a true pre-approval. And a lot of lenders don't, will issue letters with very limited information, right? Which is basically say it's based on the information you provided me, Mr. or Mrs. Buyer. Here's a letter that should give you an idea of what we think you can qualify for. And again, as an agent, those letters have zero, bearing because they're just that can change dramatically once they actually get pre-approved and start providing their documentation and information. So read the letters carefully, read the fine print, and ask the questions. What has this lender done to pre-approve this individual? Is it just a simple pre-qual? Is there a credit pull? Do they have their pay stubs and most current information and assets? And that'll give you a good indicator of whether or not they're really qualified, or if you have to ask more questions or do more work. Yeah.
Okay, that makes sense. I think we'll only have time for the one more, and then we'll do part three. Because I love talking to you. I can talk like you can, like, about this all day. Uh, Again, first time home buyers, or buyers that haven't bought a home in a long time. You've given them, the interest rate, the points, the closing fees. What other hidden costs could come up at the last minute before they're about to close? They're deep into the process. They can't back out of the house. And then they get hit up with, oh, yeah, there's all these additional fees. How can they protect themselves from that?
But so there are compliance steps in place which helps ensure that lenders don't overcharge. Having a loan estimate in hand is important because a loan estimate has certain tolerances in it, whereby certain fees cannot exceed a certain percentage, and in some cases, certain fees cannot change whatsoever. So getting a loan estimate upfront is really important. And sometimes you may not get that until you actually open escrow and are provided with initial disclosures. That's fine. Just make sure you have that loan estimate in front of you so you can compare to where the numbers are at the end of the transaction. But a lot of times it has to do with like the interest rate, for example. So you may go into a transaction with an interest rate that you think you have, but in fact, it's not really locked yet. It's just a floating interest rate. And if rates change, or if that lender is maybe trying to entice you with a low interest rate up front, by the time he or she locks the interest rate, it could be a very different rate, right? And oh, you want that same rate? Well, that rate's actually going to cost you now $5,000 or $10,000 to get, and that is something that happens quite a bit, right? At that point in time, the client says, I can't back out of this deal now. It's done. So you've got to ask the right questions. What is current rate today? When should we lock the interest rate? And if I locked it today, what would be the fees or points I have to pay for that interest rate, so that you're not surprised at the end when that changes.
Amazing. Well, I think this was great. I don't want to over bombard the audience too much with more information at this time. I want to absorb this because this is a lot to absorb, especially when you're shopping around for a lender.
Of
And
course.
I encourage people to contact you, and your information will be in the link in the description.
Fantastic. Well, I look
And
forward to part three.
thank you. We'll be doing this again, and I appreciate it.
Yeah. Thanks.
Okay.